Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to go with you through yesterday's price action on AMC. We had the second quarter earnings announcement that arrived just after market. So we have some very interesting things here to analyze. And I also want to show you some cool option strategies that you can use if you want to maximize your profits during the squeeze. So let's get into it. Alright, so the first thing, let me remind you the big picture, guys. So we had a first leg up here in Jan, then correction, then third wave, which was the second leg up in May. Now we are correcting. So, we can see, for example, this correction, it lasts from Jan, so roughly 3 months. If we correct 3 months again, it brings us to the 3rd of September. So I don't know, just looking at this, the price action like to repeat the past. So maybe we're going to have a move in September, maybe even before. So I'm going to zoom in here, but first, one more thing I want to show you guys here once again is just like, all right, I just do this, and this is how I find my target 135. So I believe we're going to go there, and I'm going to try here to show you when. Okay, so it really depends actually when we break this trend line. So let me zoom in here a little bit. Okay, so we're having here this trend line. Once again, we saw some fake outs before, so this is the best signal I could use. Here is a breakout, and we had some past breakout that actually were fake outs. So that's why I'm going to show you here some cool option strategies that, you cannot lose money. I mean, you can only lose your premium. So I think they're pretty cool here to use. And I would use these option strategies once we have the breakout. So, to optimize my entry level. And so here, what we can see, let me even zoom in a little bit more. Bam, bam, bam. All right. So what is very interesting here is that we have this short-term breakout. All right. I will update you guys on my Discord like every day. By the way, this is for free. I keep AMC and GME recap for free. I'm going to keep it like this because it's interesting for a lot of you to have this information. So I want to keep sharing it with you. And I was saying that here, what we want to see is a breakout of the 34 level, which we had. And then after market, there were the earnings less negative than expected, which is good news. Of course, AMC is not following fundamentals, but this kind of news, they are catalyzer for all the investors to jump in the market together, and it's good news, all right? So we still are happy to hear this kind of good announcements. And so here we have this breakout. So technically, this is looking very good. We had already this bullish regular divergence that is here that was showing that the market is out of steam. Here, it was a big battle lost by the bears, guys, all right? This was a beautiful bear trap, or terrible bear trap, call it the way you want, but it was a bear trap, and the bears remember it. And so this is the reason why those kind of divergence, they're gonna impact the price roughly during the period between the lows. So here it's like July and August, so 1.5 months. So everything that happened here is gonna impact the market for this time roughly, bam. Okay, so until the 20th of August. And this combined with the breakout is looking good. So here it looks like we are going to the major resistance area, which is this trend line, guys, all right? So I'm pretty sure that I'm not the only one using this. So this area, and I think that here is going to be maybe the signal that the next move up is starting. So let's try to see when this could happen, because this is, I know, what you guys are interested in. So very honestly, I don't know, but we can try to, just to see visually what could happen, what would make sense. I don't know, maybe something like this would make sense. So if you break out right now, it can even go faster. So I don't know. I think that September is a bit short, but it could happen. If we break out right away this week above 40, so 40 is the level to watch right now. If we break out above 40 this week, we're probably going to have a small retest after that and then go higher. So I would rather go for Jan 21 options, like maturities, if I have to set up some strategies. But September is going to be much cheaper. So it's interesting maybe to look at it too. So once again, what we want to see is a breakout here. And as long as we don't have this breakout, I cannot eliminate for now the bearish case that is going to 24, all right? So it would be like something like this, and then we bounce back. So then we would take longer, we would have the breakout here. And for now, as long as we are below this blue trend line, so below 40 roughly today, this is still on the table, unfortunately. So I would still be careful here. We don't have the strong, medium-term bullish signal for now, even if it's looking quite good. And I just wanted to point out the fact that in this correction, we have a one-to-one relation between A wave and C wave, which is once again following here the Elliott wave and the Fib ratio rules. So here, WXY or ABC, you usually have a 1-to-1 relation between those two legs. Those ratios, when they are respected, it's suggesting that the counting is correct. So this is, just confirming that this correction might be over. Alright guys, so now I want to show you some cool option strategies that you can make if you want to enjoy as much as possible this fifth wave. So let's have a look at it. The questions that you often asking me on my Discord is like, which maturity would you choose and which strike or strategy would you try to make? So first, for the maturity, I like to trade the liquid ones. So it's September or Jan 22. But the scenario we are playing is not going to happen, in Jan 22. Maybe, but we are playing here the scenario that we have this fifth wave coming soon, all right? So for this reason, I would go to the September maturity. That is going to be much cheaper. You can see that, for example, I like to buy some strikes that are located at the next resistance level, so that if we go above this resistance level, then it becomes support, and then you are very likely to finish in the money. So you can see that, for example, the difference in premium between a 40 strike call on the September maturity, which is 700, and a Jan 22 is, basically 100% difference. So you need to pay twice as much for Jan 22. So for this reason, I would prefer to go to September, all right? And if you want to unwind it, it's going to be as well easier for September, because the Jan 22, you need to wait very long. So then you need to unwind it. And we are playing the scenario where we're going to actually go higher in September. So we're going to be happy to be long a call here. So one more thing I want to show you is, some parameter that we can compute that is called the elasticity. Okay, so spot, performance. All right, so for example, let's compare, for example, if you go to the, 100 strike, all right? So the performance is equal to, up, VLOOKUP of this level that we're gonna try to find here, G, so 7, and exact match, all right, bam, divided by the premium, all right? Okay, so this is the performance that you make compared to initial investment. So you can see that if we go for a 40 strike call for the September maturity, we make plus 600% roughly. We go from 700 invested to around 6,000. So now let's see if we go, for example, for another strike, because I know that you guys like to go from some higher strikes, and let's see what is the difference. So here, we have a better performance. So we pay only 300, so we make less money, but we invest less as well. So basically, compared to initial investment, you have a better performance. So this is the first thing I wanted to show you. The higher strike you choose, the more performance you're going to have compared to initial investment. This is what we call elasticity. But you're going to start to generate profits at a higher level. So this is the risk. So basically, you have more leverage, all right, compared to initial investment. But the probability that you finish in the money is, of course, lower. In this situation, I would not go for too high strike, all right? Because my guess is that in September, we would be in the move up, but I don't know if we're going to reach 70 or not. So if we finish at 60, we still want to make some money. So for this reason, I would go for, if I need to choose a naked call, I would go for the 40 strike call here. And the volatility is lower. You can see that here I have a volatility of 177%, here 187%. And this is impacting. So this is the Black-Scholes formula that is using the volatility. So for example, if the volatility goes to, 250, the price goes from 7.73 to 11, all right? So you can see that here we have a big sensitivity to volatility. And for this reason, you don't want to buy those volatility that are too expensive. You actually want to be selling those, all right? When I was working, as an option trader, when I was seeing volatility higher than 100, I was like, let's sell this. So this is what pro traders actually doing. We don't buy those high volatility, we sell them. So how can we here take some upside performance and sell the high volatility? Question. And I have an answer. So you buy the 40 because once again, we want to start making money early, but you're going to sell, for example, the 100, right? So this is what we call a call spread. And now I'm taking full advantage of this high volatility that I have here compared to the one I'm buying. I'm buying the 177, I'm selling the 215. And you can see that once again, there is a very high impact. Imagine this one was at 215 as well. I would not pay 550, I would pay 770. So you can see that the volatility has a very strong impact on the price, even on those short-term maturity options. And this is the type of things that, you know, I want to show you guys, all right? Because this is things that, you know, when you work as a pro trader, that, you know, people show you that, you know, because like you work in this environment. And that's why I want to, you know, share all this knowledge with you guys. That's why I created this channel. That's why I created my Discord. And this is the type of strategies that I will try to show you as much as I can, especially after September, when we're going to start live trading with another trader that is now in the project. And it's going to be very exciting to do all of these things. So once again, if you're not there yet, guys, just click on the link in the description of this video and you can enjoy one more week, guys, with 25% off. Then I have no choice. I would put my prices higher because I don't want too many people there, so I can answer all of your questions. And thank you so much, guys, for asking me all these questions, by the way. It's exactly what I want there to happen, is that, you know, we have a lot of interactions, a lot of questions. I would, of course, start to make some, you know, kind of classes for beginners to try to teach you guys, you know, the basics, because some of you are very advanced, some of you are less advanced, you know. So this is the project I'm having, and this is the type of things that I will try to share with you. So here, let me conclude what I would do. I would go on the September maturity because it's cheaper and because this is the move we are playing. I would buy for this strike call because I think that we might be ongoing in the move up. So I don't want to buy a strike too high, even if I have more leverage and, you know, I have a better elasticity with a higher strike. I prefer to buy a 40 strike call and selling the 101 to enjoy this difference of volatility. And once again, by doing that, I maximize, guys, the performance compared to my initial investment, plus 1000% in this situation. All right. So this is for me the best trade that we can make. And in terms of unwind strategy here, we keep it until maturity. That's why we choose a short maturity, and we just hope that it's going to finish as high as possible in September. All right. There is nothing to do. You just go for that and you hope that this finishes in the money. So this is what I would personally do. So I hope you guys enjoyed this video. I hope I managed to explain how to take advantage of the volatility market, how to choose a maturity, how to choose a strike, you know, by reminding you where is the next resistance level, stuff like this. So if you did enjoy this video, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.